Okay, so we're just going live. Yep, and we're live now.
Okay, good evening, everyone. Welcome to another one of the Finance Medics webinars. We're just going to give it another minute or so before we get started, just so everyone has time to log in and get watching. And then I will introduce Dr. Cyra Asher and we'll get underway. Okay, good evening, everyone. Thank you for joining us. This evening's webinar is about the financial implications of working as a career locum. So not just picking up extra shifts, actually only doing ad hoc locum shifts. We've all heard of people that somehow make more money doing this than their colleagues that stay in the training pathway. But Dr. Asher this evening is going to break down actually some of the facts behind that and how to make it work for you. So as you all know by now, Dr. Cyra Asher is an academic foundation trainee in the Oxford Deanery and is also a chartered accountant. And she will be leading tonight's webinar. I will be monitoring the Facebook chat. So if you have any questions as we go, please pop them in there and I will pass them on to Dr. Asher. I will also post a feedback form. Please do take a couple minutes just to fill that out. We really appreciate any feedback that we get. We do go through it and try and make changes, and we also use it for our own portfolios. So without further ado, over to you, Dr. Asher.
Thank you. Hi, everyone. Thank you for joining me this evening. Today, I'll be talking about the financial implications of working as a career locum. As James mentioned, this is different from just picking up a few shifts with the trust you work in, because that's all done via the payroll. This is actually about working for multiple trusts or working for an agency or even doing working for a GP where you invoice them, for example. I'll go through all of that. So also, whilst we're here, do feel free to just drop any questions about any topic that I've done so far or haven't done so far, and I'll try my best to answer them. We'll do a Q&A at the end. And if you actually have any questions about F1 as well, please feel free to drop them in. Be happy to answer those as well. So we're going to talk about why would a person locum, the different ways you would be paid as a locum, and the financial considerations you should think about if you decide to become a career locum. So you might locum to save up for a specific goal. A lot of people are able to save up quite quickly for a house deposit, for a long period of traveling where you actually are able to save up for the traveling, but also you're able to go for the traveling because you don't have to worry about leave. You can pick and choose when you're working, you can pick and choose the hours, you can pick and choose which periods of time, how long for, and that takes me into the flexible hours. So being a career locum, which means basically a full-time locum or purely a locum, means that you don't have to do all the rota commitments that come with an employment as part of a trust, for example. You don't have to worry about, you have to work certain weekends or you have to do nights, whatever. You can decide what kind of hours you want, how long you want to do it for, which days you want to do it for, and whether you want to take periods of time off in between. And locuming is also different. You get a different set of responsibility. So the overall managerial side, say if you're a GP locum, you don't actually have to do as much of the managerial side of things because you're there to provide a service. Your service is to see the patients and provide GP services to them. It's not to manage the GP practice or potentially not, you don't have to teach medical students, things like that. So actually, you might choose to locum for many different reasons. These are just only a few. What James was saying about it is, yes, it is quite lucrative. So you do actually earn more an hour as a locum. Locum rates are higher than as a permanently employed doctor in a trust or a GP. This is because of the ad hoc nature of it, the fact that there is uncertainty to being a locum. There might not be hours available one time when there are another. That's not really the case at the moment because locums are quite sought after. We do have a shortage at the moment to fill in lots of rota gaps, for example. And so these rates need to reflect how much locums are needed. And so you can actually end up being paid quite well, especially if you're doing shifts that others don't want to do, like nights or weekends, evenings. You're more likely to attract a higher rate because you're willing to take on shifts that others aren't willing to do. Locums also provide something really important, which is the flexibility for trainees in the training pathways to be able to do things like less than full time or to accommodate their medical needs or personal needs when it comes to things like changing their rotas. So locums are actually really, really important. So there are 4 ways that you can currently be paid as a locum. The first one, and probably the best one I'd say, is the PAYE, which is pay as you earn via the trust. If you are working for a hospital, for example, and it's a locum for just one particular hospital, you can be paid via the trust like you're a normal employee through their payroll, which means there's absolutely nothing for you to do. You don't have to do any self-assessments with the HMRC. You don't have to make any declarations. All your income tax and your pension deductions are taken at source, and then you are paid like a normal employee. The other beauty of this is, and I'll come to it later, is that you can actually still attract the NHS pension scheme. If you caught my NHS pension scheme webinar, self-plug there, or please do if you haven't, it is very highly complimentary of the scheme. It's a very generous scheme. If you have a chance to get in, you really, really should. It's one of the best schemes out there at the moment because most schemes are going towards defined contributions, which are much less generous. So the fact that you're paid via the trust is fantastic because it means there's no faff and you still attract a pension. Via an agency is very similar, but instead of being paid by the trust itself, you're just being paid by an agency. An agency is profit making, which means that the rate you might get directly with the trust is not the same you'd get with an agency because the agency is charging the trust a fee to find the locum. So you might get paid a little bit less, depending on whether they've advertised via an agency or not. But at the same time, you are using the agency's payroll. So they're doing the same thing. And you can still get a pension, the NHS pension via the agency because they're registered as providing a service to the NHS. So for both of those, even though it's actually not happening as much at the moment with the agency because there are some rules that have been introduced that prevent agencies from charging for certain things. And there are also procurement rules because the trusts have to make sure that they're getting the best value for money. There are certain procurement rules, so agencies aren't actually benefiting from being agencies that have to maintain a payroll. So actually you're seeing less and less of this anyway. Umbrella companies, again, you're seeing less of these as well. This is when someone owns a limited company and then they employ you and pay you through their company, through their payroll. They're not necessarily an agency, which means they're not responsible for finding you a job. They're not responsible for finding you a locum position, and they're not responsible for negotiating your pay. All they do is get the money from the trust or wherever you're working and pay it to you, take a cut of it because they're providing a service to you. But it just means that you're not having to do a self-assessment and you're not having to do pensions and things like that. Again, with the umbrella companies, they can handle pension contributions as well. And depending on the umbrella company, the way they're registered, they may or may not attract your the NHS pension. So it's really, really important you're careful about that, because if you would like to be in the NHS pension, you decide to use an umbrella company. If the company is not registered properly in the particular way that it needs to be, you might not be able to enter the NHS pension. Again, there are fewer in these as well because of the tax rule having changed. So they're not actually advantageous. I've just mentioned them because there are still a few bobbing about, but I think they're becoming less and less, and everything's moving towards the PAYE via the trust. Now, the last one, limited company invoice. This is when you as a doctor sets up a limited company and then invoices for your services as a contractor. You can no longer do this with hospital and locuming anymore. It's only allowed in GPs because GPs work as a separate entity in themselves, as a separate business, whereas hospital trusts are via the Department of Health as a devolved service. So because of that, you're not going to be able to do it if you are a hospital doctor or you want to work as a hospital doctor, but you can do it if you want to be a locum GP. You will most certainly need the services of an accountant for this, because you have to not only do a self-assessment of any money you take out of this limited company, you also have to do a business tax return, which an accountant needs to do for you. You also have to make sure that you are paying the correct tax. So income tax and national insurance contributions are all done in a self-assessment. You have to make sure you're paying the correct business tax, reclaiming the correct tax deductible expenses, and making sure that you're paying, if you are classing yourself as an employee of the company, you'd also have to pay employee national insurance tax. So it's quite complex. It used to be much more lucrative to do it this way because you could avoid certain tax charges, but that's not the case anymore because they've sort of realized that that loophole exists. So now you do end up actually paying a little bit more, if so the same or a little bit more tax, depending on how much you decide to take out. The beauty of the limited company is, for example, you can decide to keep certain amounts of money in the company, pay lower tax on it, and actually take a lower amount out as a salary for yourself. So you pay lower income tax on that as well. It just means that you have more control of how much you're actually taking away. Whereas if you're paid by the trust, you've agreed a certain rate, that's going to be paid to you and you're going to be taxed on that. So say you're working in a limited, in a GP, as a GP locum, and say you're only doing 6 months a year, you then can decide, actually, I don't want to take all of the amount I get on a monthly basis and be taxed fully. What I want to do is use my personal allowance and a little bit less than what I would have gotten if I was paying, being paid via directly or a trust, leave the rest of the money in there. And then when it comes to the months where you're not working, you can then take a little bit of money out and hopefully still use your tax-free personal allowance or just pay less tax on it as a result. So it gives you a little bit more flexibility, but again, you're going to have to employ an accountant just because of how complex it is. So financial considerations. So there's other things to think about when you're deciding to become a career locum apart from just how you're going to be paid. Things like paying your income tax and national insurance, about how you will have to deal with pensions, your student loan. Some things I haven't mentioned here are things like the uncertainty of getting locum shifts. You might not always be able to arrange regular shifts. You might not be able to arrange regular jobs. Like I said, the market at the moment is a buyer's market. So you will be relatively okay at the moment, but depending on when you decide to do it, things might change. The other considerations to think about, and I've not included it here because they're not financial, but things like your CPD, your training, revalidation, appraisals. So just keep in mind how you're going to keep those up to date to make sure that you can still practice. So first of all, income tax. So these will be deducted at source, like I mentioned, if you're getting PAYE. Just keep an eye on your tax code with these because HMRC, sometimes if it sees that you're being paid by multiple trusts, for example, might think that you're actually working 2 jobs, which you are technically, but you might be overtaxed. With this, you're probably not able to actually change the tax code at the time, but what you can do is reclaim overpaid tax. And it is a lot easier to do now that the HMRC has an online portal, which I've mentioned before. You just need to get a government ID and then you can access your income tax via their online portal. If you invoice via a limited company, like I mentioned, as being a GP locum, you'll need to finish a self-assessment and pay the income tax and national insurance that you owe. You will also need to pay business tax on top of that, but you will have expenses that you can deduct, which is useful. You can't do that as personal tax. And then you will definitely need help of an accountant just to stay on top of all this. And then both ways, you can still reclaim tax spent on expenses. So I think I've explained before that the tax that you've paid for things like your GMC fees, exam fees, memberships of different colleges, you can claim that back, the tax, not the actual amount. So if you're doing either a limited company or you're being paid by PAYE, you can still do that. If you're a limited company, though, you can also claim mileage, which you can't do as someone who's employed by the trust as a locum. So make sure you keep good records, because your accountant will help you sort that out in terms of reclaiming mileage expenses. So for pensions, this is quite important. So when you're locuming, if you're being paid via PAYE, you still have access to the NHS pension scheme, which is fantastic. It means that you can still invest in your future. You can take advantage of the employer contributions, which isn't afforded to many other people who decide to do in different professions, who decide to work in this way. The fact that you have access to this is pretty special. And you can use the extra benefits like the death in service benefit for an overall excellent pension scheme. I'm not being paid to do that. It is actually just quite good. If you're being paid via invoices through a limited company, you'll actually have to do your own pension, or SIP, SIPP. It's a private pension scheme. These aren't as generous at all. They're defined contributions, so do watch the webinar that explains the difference between them. And the fact that you've already been taxed on the money that you're going to be putting into your pension scheme, you end up being taxed twice, because you pay income tax on the money that comes out, and then you pay income tax on money that you have put in your pension and then draw down later on. So it's much better to be doing the pension scheme with PAYE, so you can at least use the NHS pension scheme and save on the income tax there. Student loan. So as much as I would like to avoid talking about student loans, here we are. So HMRC automatically notifies student loans company if you're paid via PAYE from the trust. So the student loan company is told by HMRC that, okay, they've started working, this is their salary. And they go, okay, so this person is earning above the threshold, they should be paying their student loan repayments. When you've got PAYE for a trust or an agency, they can do the deductions for you, so you don't actually have to pay directly. Whereas if you locum for different companies, you might not be able to set that up. The company, the trust you're working for might find it difficult to calculate. So you might have to pay them directly. You do that either via direct debit, or you ring them up and you pay with your card. If you're invoicing through a limited company, this is most certainly done directly. HMRC will be notifying them of your personal assessment income. So it is something you are likely to be chased up for. So it's important that you do stay on top of them, because you don't want it sort of coming back and biting you. So that was actually all of the talk. It was quite short today, because locuming in itself is not really that financially complex. It just takes a lot of organization, making sure that you're on top of things. And the financial implications of locuming isn't the problem. It's all the other things, like the uncertainty, the training, making sure that you're keeping up with your CPD, how it works in terms of going from trust to trust, for example. But so many people are locuming nowadays. It's unlikely that you won't have someone who will help guide you with that. So just keep in mind that the best way to be paid is by the trust through PAYE. And if you're doing a GP locum, if you choose to do a limited company, you're going to need an accountant, but you might not have to do that if the GPs are willing to pay you through their payroll. So just have a think about that. Do we have any questions, James?
No questions have come through yet, but if anyone does have any after the talk is finished, or if you're watching it kind of a day or two after the video has been posted, please do pop some questions in the chat. We do go back and have a look at that. But thank you very much for the talk, Dr. Ash. That was very informative. Just want to remind everyone to fill out the feedback form. Again, even if you're not watching it live with us right now, please do just take a couple minutes to tell us what you liked, what you didn't like, and give us some things to work on and things for us to kind of use as evidence in our portfolios. We very much appreciate it.
Thank you.